again, most of the businesses here are probably like kind of like service businesses more than anything. But let's talk about pricing a little bit. Can anybody tell me how this budgeting and things along that line kind of helps you determine your pricing? What you're able to spend and buy. So one of the things I see quite a bit is, well, how do you pick what you're going to sell your products and services for? So I see some people say, you know what, I don't know, $30 just seems like a good number to pick. And it's a good start. You got to start somewhere. But what a lot of this budgeting and cost analysis does is really help you kind of dig into and figure out what your expenses are, what are fixed, what are variable, and to say, am I covering it? Even with consulting companies, I mean, you know, I've had times where I didn't factor in mileage like I should have. Like, this is a client that I have to go visit in Chicago, and I bill, you know, I assume that, hey, the project's going to be $5,000 or $10,000, and I realized that I spent, you know, $1,000 on gas getting back and forth, or things along that line, or printing costs, whatever it may be. So part of it is really kind of just understanding the costs that are attributed to your business. So some of these financial statements that we talked about, when I say profit and loss statement, who understands what I mean by that? And yes or no? Everybody's hand should go up for that.
Well, profit would be what income you're making, and your loss should be what expenses are you taking in, and part of your expenses also are true losses, such as especially in you guys' cases, would be if you purchase a vehicle for a certain amount of money, every year that vehicle depreciates. Mm-hmm. So that's actually could be covered on an actual loss basis. From a accounting point of view, even at the end, instead of there's an actual way to do projections on 7 years, 5 years, or 3 years depreciation. So instead of taking true cuts, you take depreciation losses.
So basically what he's referring to, and this is where I won't say it gets a little bit challenging, but profit and loss is basically what you owe in taxes. It helps you determine, not you, but it helps you or your accountant determine on what you owe in taxes. It's probably one of the most critical, so a lot of times it's profit and loss statement or income statement is what you hear a lot of people call it. It's actually not probably my favorite statement, partially for some of the reasons that that Raphael actually mentioned, that I'm actually more interested in a cash flow statement. But the profit and loss statement, again, it tells you what you owe in taxes, but it can kind of throw you off a little bit. Like sometimes you can have a situation where your company is actually not making a profit, but does have cash in the bank, and there's times where you actually might seem like you're making a profit, but you don't have cash in the bank. And just kind of a good example, a lot of times in profit and loss, depending on which way you do it. So let's say you just got a $10,000 contract, right? But if it doesn't pay you for 90 days, some profit and loss statements, depending if you use cash or accrual, they actually count that as money that you earned right then and there. But that's not really cash in hand yet. The other thing, and this kind of goes to Raphael's point. So let's say you have $10,000 in your bank account and you need to buy a new van. And let's say that van is, I know this isn't going to be it, but let's say that van's $5,000. So based on your checkbook balance, you have $5,000 in the bank. But on your profit and loss statement, you can only, they call it write-off, you can only write off a portion of this at a time. So certain expenses you can write off immediately. So for example, phones, mileage, things on that line. But to go to Raphael's point, when something has an extended life, you can only write off a portion of that every time. So for example, if you have a vehicle, is it 5 years on vehicles or 3?
5 years.
5 years. So what this means is you can only write off a portion of this on your taxes over a 5-year term. So you can only say, you know what, taxes, every year I can write off $1,000 of that, not the whole $5,000. So where it gets kind of tricky is, if I just looked at it from an income statement, if I had, let's say $10,000 in profit, $10,000 in profit, but I can only write off 1,000 of that, from a tax purpose, I made a profit of $9,000 and I have to pay taxes on $9,000. Whereas here, you're looking at, well, I just spent $5,000. Why am I paying taxes on 9? I should only be paying taxes on 5,000. So that's where this is really kind of more focused on accounting. And I know I probably lost some people with that. But again, this is more your accounting and tax stuff more than anything else. everything that you spend isn't necessarily considered an expense immediately. Sometimes it's spread out over time, which is why I actually like what I call a cash flow statement. And I kind of merge these two together. Well, for me, what a cash flow statement is, it basically tells me what is in my bank account. That, to me, as a business owner, is what I care about. Now, I want to know profitability. Am I charging enough for my services and things along that line? But a cash flow statement tells me what's in my bank account. So I'm going to give you an example of a few things that are not usually reflected or should not be reflected on an income statement that would be reflected on a cash flow statement. So, for example, if your company borrowed $20,000, on a cash flow statement, that's going to show up. It's going to show I borrowed $20,000. Now I have plus $20,000 in my bank account above and beyond whatever I had before. My profit and loss doesn't catch that at all. Now, if I have equity money that I put in myself, that's reflected on a cash flow statement. It's not reflected on a profit and loss statement. So for me, this is the one I look at first. I might go back and look at this one later because this depends and determines what I have to pay my taxes on. But I want to know what's going on with my business. So for example, if profit and loss, if I have zero profit because I wrote off a bunch of stuff, but I got $250,000 sitting in the bank, I know I'm okay. But if I just look at this one by itself, I might think my company's about to fold up because I have zero profit. But I might have wrote off a bunch of stuff. But I got $250,000 sitting in the bank that I'm waiting on a project to go for. So that's why I focus a huge amount of time on this. The balance sheets, I'm not really going to focus too much on that. Balance sheet is basically kind of like your assets and liabilities. Things you own, vehicles, whatever it may be, and really how much they're valued at this moment, and who you owe and what you don't owe. Sources and uses, break even. I don't want to take a huge amount of time to delve into that right now. I think that's kind of the gist of what I had, and we're probably getting close to about the hour mark. I have a few other things I could probably touch on. With that being said, is there any questions that just popped up or things you guys want me to delve into a little bit more? I think Mike had something. Raphael, I'll go back to you.
I got a question. This kind of relates to this. So I agreed to do a video for this nonprofit organization, but they don't have the money to pay me.
Okay.
I want to know if I can. Is there some way? Because I mean, it's still costing me money, time, and money to do this. So is there a way that I can like write this service off?
Yep.
And what kind of documentation do I need from the organization?
You might know the answer to that a little bit. I don't know what the form of documentation is called, but any time and services you donate, you actually can get basically a business credit to write that off. I'm not sure what the form itself is actually called, but yes, you are able to do that.
Okay. Is this something that the organization has to provide for me, or is it a form that I can get from the government?
I think the organization does have to sign off on it, just so you're not like making up stuff. Like I gave them, we gave them $1,000.
They call like a donation sheet or something?
Yeah, it's something like a donation sheet or something along that line.
My son doing it for his school, it's called like a donation.
Yeah, I would
sheet.
figure-
Right, I kinda opted or whatever.
Then you have to make sure that you get their tax ID number so they can make sure that
Yeah.
the non-for-profit 501c3 status is still up and running, because if it's canceled in the middle of the year, you don't get credit for it.
Oh, okay.
So he's just saying you gotta make sure that the nonprofit is actually up and running and legitimate and not fake.
Well, a lot of people get cut in the middle of the year because they didn't bring their statements, and it's so it's basically then reissuing. But if he got that statement during that time, it doesn't count.
So if you actually put it on your taxes and they do an audit on you, they could actually come back and whatever that deduction came up to, recharge you back plus interest. So you gotta make sure that, you could just call the IRS and say, hey, I got this company, are they still in business, or are they still, their 501c3 still good?
There's
Real
a
easy.
website to look at them too.
So like WFI or something like that, probably.
I think so. You can see if they're in status.
Well, my question was distribution. In regards of after revenue and operation expense and non-operational income, like if you have partnerships, how do you determine now? Because it becomes a new, like you were saying, he doesn't have a partner anymore, so now all the cash is going to be for him. What if he decides to get into a partnership? How does his pricing module change?
I guess I need to clarify that a little bit more. I guess my first pass guess would be now you're feeding 2 miles instead of 1.
Correct.
So you kind of have to figure that out. But with that being said,
So how do you fluctuate your pricing from there? Is there a certain it's a certain addition you do to it, or a certain percentage you go up on your pricing to make sure there's profitability?
I can't really say I've ever done any analysis like that. My guess would be just kind of in your fixed cost assumptions, would really need to add that in. So what I mean by that, specifically, if you're two partners, you're like, you know what, we need to take distributions of $5,000 per person per month to kind of back into, okay, if we only want, you know, so we got to hit 10,000 between the two of us in distributions. And distributions is just, I don't want to delve into it too much, but it's a way that people that own LLCs pay themselves a lot of times instead of actually being on payroll. Distribution is a percentage of the profits go back to you soon. So if you say, you know what, I got to make 10,000 between the two of us no matter what, whereas before it was 5, but you say, you know what, I only want to work on 10 projects. What does that equate to? My guess is because if you bring on a new partner, you don't really. Hopefully, that new partner's bringing a new business as well, and you're not like, you know, bringing on a new partner and staying at the same level you were before. So somewhat embedded in the expectation. If you're coming in as a partner, I don't even want to double revenue. I kind of want to do 2.5, 3 times revenue because, you know, if a new partner comes in, of course you're going to double my revenue. Like I'm not going to pay you not to. The other part would be if this partner came on board, what kind of new expenses would be incurred with that? If it's just exclusively like, you know what, we can use the same office, we have our own phones already, we don't have to worry about that, then that's one thing. But if that new partner coming on all of a sudden increases your coffee consumption and your office expenses and things along that line, then you might have to adjust that accordingly. So again, I would just really make sure that you're digging into understanding what are those operational costs of having a new partner involved, as kind of a simplified answer.
Can I just shoot 2 quick points from distributions for partners too? It depends on your percentage. I own 50%, you own 25%. I disperse $1,000, where I get $500, and you get $250, and we have an operating agreement on how to disperse those things. Again, the reason why this may seem like it's Greek to you, the first time I heard it too, I was like, what? You know, I remember telling my dad, I go, Dad, I got a trust in place. I paid a lawyer $4,000, I got a trust in place. Shit, son, I don't trust anything but the money in my pocket. I said, no, Dad, it's a trust. It's a legal paperwork that you put all your assets under. You know what I mean? Like, damn, you know, just trust. But think about that distribution as just another way, another strategy to pay yourself, depending where you're at in your business. And I've taken distributions, profit distributions, say, hey, I'll pay taxes at the end of the year. Or I was an S corporation, so I was able to take my losses or whatever I had and pass it through with my profits, depending where you're at. I was wondering if we could do an actual budget and net profit, like we do 3 expenses, they all share expenses, and then we do the money that they bring in, and then we do what the net profit is. This is the basics that I had to learn.
Yeah, so we'll just have, like make a believe business that has 3 streams of revenue. Does anybody have any ideas of like what our first stream of revenue could come from? Any ideas what kind of make believe business we want to have? Okay, what should we use as?
We make product A, and we make $1,000 off of product A.
All right, product A. So,
Yeah.
all right, yeah. Well, I guess we'll do it that way. So, product A is we'll sell for $50 a piece, and we're gonna sell. We'll do this on an annual basis just for simplicity, and we're gonna sell 1,000 of those. So, on a yearly basis.
Notice he's using green too. That's green for money. See, there's a strategy that gets exciting. Green money.
So, okay, so we're selling each of these units $50 a piece, and we're selling 1,000 of them a year. How much are we making in income or revenue? Well, I guess gross income. How much are we making a year from these 1,000? Just simple math. This time it was $50. Okay. Now, the next one, we'll have another product that we'll sell for $75 each, and we sell 2,000 of those a year. Can anybody tell me what that comes up to? $150,000 a year. Okay, and product 3, what do we want to sell it for? $10. We want to go something cheap, $10, whatever that may be. And how many of those do we want to sell in the first year?
200. We'll make it easy.
We'll do 100,000, we want the real money. All right, so
Money in the
how
bank.
much is that coming up to? Got 100,000 units, $10 a piece.
We're just gonna add one more zero to that 100,000,
The
right?
meal ticket.
How many people have ever generated $1 million in their business in yearly revenue? That's scary. A 100 G's a month, scary, boy. So, you
So
know,
can somebody add all these up for me? We're gonna figure out between these three revenue streams, how much revenue we actually generated, what we call gross income. 1.2 million? Which kind of goes to Mosaic's point, it's basically $100,000 a month, which, and this is kind of a different conversation later, but what's kind of getting me is, these aren't even really that big of numbers. Like, I know all of us would love to have businesses at these levels, but these are all really, really doable. I mean, actually, really every business in front of us can hit these numbers. You know, it might seem like a leap from maybe where we are or whatever it may be, but they can be hit. And that's, I had a conversation earlier about kind of the fear of success a lot of times. You know, if we're talking about managing a $50,000 business or a $100,000 business, when you're actually dealing with a $1.2 million business, understanding all these financial concepts definitely comes into play. Like, it's one thing to make a mistake when you're only making 50,000. It's a whole different thing to make a mistake when you're making 1.2. And again, this is kind of the tie second one a little bit. What we're here to do is actually to help at least 10 businesses hit this mark. Like, we want to have 10 businesses that really have $10 million in revenue. This is what we're trying to do. And there's a lot of businesses out here that have the capacity to do that. Again, it's a challenge, and sometimes that can be scary to say, you know what, you know, after profit, we got, you know, now I have $200,000 sitting in my personal bank account. Like, that's life-changing money for a lot of people. It's not necessarily Warren Buffett money, but $200,000 sitting in the bank free and clear definitely is some life-changing money for a lot of people in a lot of situations. So this is what they call gross income or gross revenue. That's basically all the money that was taken in. Now let's assume that we're gonna look at some expenses.
so this is what I had to correlate from coming from the city. They would say, what is your gross profit? What the hell do you mean? This is how much money I hustled, this is how much money I gained. You know, I couldn't correlate it. I was going to the bankers, I couldn't go, what the hell's the gross profit? This is how much money I made for the day. This is the bank I brought in. That's how I had to correlate, think through on that. But he's right, that 1.2 million, with some of the talent that we have here, the talent, and the passion that you have, your line, your passion, that 1.2 million ain't nothing. And I'm coming from someone who built a business who hated it. And I'm saying, is the talent that you hear, 1.2 is nothing. And when you start to get to those levels, it's when you start to pay yourself the six figures, the money you deserve, and be able to, not even that, be able to give back more. And I know this is a servant mentality here, and a bunch of givers here that give of the time. Boy, when you start making those millions, you start giving that back, it's a whole other level. Just remember me.
From your shape.
So what we're looking at here is some expenses, and so again, we're going to kind of make this simplified. We only got about 3-4 minutes before I open it up a little bit. But these specific expenses here are called cost of goods sold, also known as COGS, which are basically variable expenses. Cost of goods are basically expenses that are attributed to the sale of that product. So it's an expense that we're only incurring because we sold something. So for example, what I did here, this one links to this one, 2 links to 2, 3 links to 3. So we sold 1,000 of these, and we sold for $50 a piece, but it costed us $25 to make that. So our cost for that one would be $25,000, because it cost us $25 for 1,000 of them. Here it cost us $50, and we sold it for $75 for 2,000, which is 100,000. And here, the one that we sold for $10 at 100,000, it costs us $5 for that same 100,000, which is $500,000. So can somebody add up for me 500,000, 100,000, and 25,000? 625, 624.
Make sure you type. All right.
So a lot of times they call it gross profit as well.
Or net profit. I heard it, so we can gross,
Yeah.
net profit again. You know what? This is how much I had to correlate. What the hell does that mean? This is how much money I got left in my pocket, right?
So basically what we're at now is figuring out kind of what do we have left over after we paid out these basic expenses? So we had 1.2 million, take away 625,000. If we just use easy math, it says 600,000. Basically, we have 600,000 left over, which on a monthly basis, 12 months, was it 50,000 a month? Yeah, I think that's 50,000 a month. So then, I'm just gonna look at these high-level expenses, but then after that, you can start taking on other expenses. Payroll, rent, vehicles, things along that line. So that'll get you all the way down here. Now, I know there's some back and forth, but a lot of times, most businesses that are successfully run, unless they're consulting companies and things along that line, really only clear about 10 to 15% of what they bring in. Some businesses probably get as high as 30%, but very, very few of them. McDonald's is probably one of the most efficiently run companies, and they do about 10%. So what I mean by that is, can anybody tell me what, if everything we brought in was 1.2 million, what's 10% of that?
120,000.
120,000. So that's basically what the owners have left over, and that could be just you, that could be your partners, whatever it may be. So when I say I want to work with businesses to get them to $1 million, it's partially to help hit real numbers like this. Kind of as a comparison, if your business just brought in $50,000 a year, that could be a good side business, whatever it may be. But if you only made 10% of that in profit, that's what, $5,000? If you made 15%, that's $7,500. That's decent money, that's decent side money, but is that really money to let you go out and quit your job? And so when I talked a little bit earlier about bakeries and things along that line, if this individual told me she needed to make $50,000 after it was all said and done, which would be this number here, and she was only able to make 10% profit, that means she'd have to sell $500,000 in cakes just to walk away with $50,000. No, yeah, it's a lot of cakes, and I'm not saying she can't do it. I'm not saying anything, but it's one of the things where now that number's in front of your face to say, okay, here's the number we need to hit. How do we hit that?